It's on a very good evening. Right, this is a recorded video just to help those who needed the assistance. Okay, so this is exercise from page 91 of the textbook. It is a PR 2-3. So what we're going to do today is to look at the transactions, and we're going to record the journal entries. Journal entries is the first recording in the accounting system. So whenever you have transactions, the first entries into the accounting book is what we call journal entries. Okay, now, so first we're going to identify each transaction and what are the accounts that involve. Okay, right. So the first one is November. Let's get November 1st, 2018. Betty, the owner, established an interior decoration business. So interior decoration business is about the making the office or house beautiful. Okay. So Betty offered this service to the public, and as a return he will get some fees for the services. Okay, now let's look at the November 1st. Betty transferred cash from personal bank account to the account of business, and the amount is 27750. So the first thing we have to record is to record the account bank. Okay, account bank belong to the business. Okay, so debit bank account and credit the owner equity. The amount is 27750. Okay, so debit cash account 27750, credit owner equity accounts 27750. Right, second transaction is paid rent for the period of November 1st until the end of the month, and the amount is 4,000 ringgit. Okay, for this transaction we have to record the rent payment. Okay, it means that the business paid rent amounting 4,000 ringgit. So the account involved is rent account and cash. So we have to debit rent account 4,000 ringgit, credit cash account 4,000 ringgit. Okay, now let's move to the next transaction. Okay, the next transaction is purchase office equipment. Okay, when we purchase office equipment, we have to record the assets. Office equipment asset. Okay, office equipment with the amount of 12,880. 12,880. The accounts involved is office equipment, debit office equipment 12,880, and we will have to credit accounts payable. Accounts payable 12,880. Okay, next, purchase truck. So purchase truck. Purchase truck 32,500. Okay, so we have to establish the truck account. Okay, truck account is an asset account. So the journal entries is debit truck account. The amount is 32,500. Okay. Okay, and another accounts are cash because we are going to we pay cash of 6,500. So credit cash 6,500, and also we give notes payable. Okay, notes payable, how much? So we have to calculate 32,500 minus 6,500, and the amount is 26,000. And the account involved is the notes payable. Okay, so we have to credit notes payable, and the amount is 26,000. Next, purchase supplies. Supplies is an asset account, so we have to create supplies account. Debit supplies account 1860, and credit what? Credit cash. Credit cash 1860. November 12, receive cash for job completed. So this is we have completed the job. Okay, we have delivered the services, and we have to record the revenue. Okay, so debit cash 7,500, and credit fees earned 7,500. Next, we move to the November 15, paid annual premium on property and casualty insurance 2,400. Okay, so what we have to record here is debit prepaid insurance. Okay, because this is payment for 1 year. Okay, annual means 1 year. So debit insurance premium 2,400, sorry. Credits the cash 2,000. Okay, can follow? Okay, we move on to the November 23rd. Record jobs completed on accounts and send invoices to customer. So means that this business have completed the services. Okay, performed their services, and have already given whatever the customers want, and we prepared invoice, give to customer, and waiting for customer to pay. So we have to record the revenue. So debit accounts receivable, because we haven't get any money yet. Debit accounts receivable, and credit, yes, credit fees earned, and the amount is 12,450. Next, November 24th, receive an invoice for truck expenses to be paid in November. So going to pay in end of November only. So we have to record debit truck expenses. The amount is 1,100, and credit accounts payable, and the amount is 1,000. Okay. Okay, November 29, paid utilities expense. So when mentioned about paid, it will involve accounts, cash accounts. Okay, so debit utilities expense 3,660, and credit cash 3,660. November 29, paid miscellaneous expense, same method. Okay, debit miscellaneous expense 1,700, and credit cash. On November 30th, receive cash from customer on accounts. Okay, so this one means that we receive cash because we have performed these services. So debit debit cash and credit revenue expense. Credit revenue or the fees at 8,000. Okay, next is paid wages to employees 4750. So we have to record the wages expenses accounts. Okay, debit wages expenses 4750 and credit cash 4750. November 30th, paid creditor of portion of amount owed for equipment purchase on November 6. Okay, we have referred to November 6 here. So the amount paid is 6220, debit accounts payable 6220 and credit cash 6220. And finally, withdraw cash for personal use, debit withdraw accounts and credit cash. The amount is 2,000. Okay, so in this video we have identified each transaction, which account involved, and what are the debit and credits. Okay, I will prepare another video to show the journal entries. Okay, good.